Welcome back, finance enthusiasts. Today, we're going to unravel the enigma behind one of the hottest stocks in the market, Zoom Video Communications. Let's start by zooming in on some key metrics. Zoom's price-to-earnings ratio on a trailing 12 months basis is a modest 30.78. But hold on to your hats, because over the last 5 years, that average skyrockets to a whopping 113.64. Looking forward, the PR is forecasted to drop to 13.12, suggesting a potential bargain for savvy investors. And don't forget about the price-to-earnings growth ratio or PG ratio, which stands at a tantalizing 20.52. Remember that a value around 1 is when a stock is considered undervalued, so this high number can suggest a highly overvaluation to his growth prospects. Now let's talk about returns. Zoom's return on equity is a respectable 8.96%, while the return on assets comes in at a solid 7.06%. Those are the kind of numbers that make investors do a happy dance, suggesting how efficiently Zoom uses his shareholders' equity and company assets to generate earnings. And with an earnings per share or EPS of 5.21, it's clear that Zoom is no stranger to profitability. In fact, the EPS is projected to grow at a rate of 1.5% over the next 5 years, adding even more sizzle to this already hot stock. But what about the company's track record? Well, buckle up because it's been a wild ride. Zoom has seen a positively stratospheric evolution in its earnings per share over the last 9 years, with a jaw-dropping compound annual growth rate of 44.84%. And while the free cash flow per share has remained relatively flat, there was a seismic shift in 2021 when it skyrocketed from 0.49 to 4.88, boasting a compound annual growth rate of 63.06% over the last 9 years. Now, let's talk about dividends. Zoom doesn't currently pay dividends, opting instead to reinvest all earnings back into the company's growth potential. And with an operating margin of 5.04% and a profit margin of 14.08%, it's clear that Zoom is firing on all cylinders. But wait, there's a plot twist in this thrilling saga. Despite a positive evolution in revenue over the past 8 years, the earnings have had a huge drop the last year. However, its total return to VO in the last 5 years has been a roller coaster of twists and turns, reflecting the unpredictable nature of the market. Going from plus 1,500% total return in 2020 to around 70% that now have. But what about the company's financial health? Well, with a debt-to-equity ratio of a mere 0.01 and long-term debt-to-equity ratio also at 0.01, Zoom is as sturdy as they come. And despite a slightly rocky average price return of minus 5.45% over the last 52 weeks, Zoom's market cap sits at a staggering $21.20 billion. Now let's peer into the crystal ball of analysts' predictions. On average, analysts expect Zoom's price to reach $79.26 in the next 12 months, representing a tantalizing upside of 12.9%. But hold on to your seats, because I believe Zoom's fair value could be even higher, at a jaw-dropping $107.05. That's right, folks, I'm talking about a potential undervaluation here, suggesting that Zoom could be the steal of the century. So there you have it, folks, a whirlwind tour through the financial galaxy of Zoom Video Communications, where numbers meet innovation in a spectacular dance of success. If you enjoyed the video, don't forget to like, share, and subscribe for more financial adventures. Until next time, happy investing!